Hello, Warriors. How's everyone doing? No one's saying cash is trash today. Have you noticed? It sure was trash until a few days ago. How you doing, Richard? Jatine, Hugo. Hi, Jays. Everything's getting hammered. How you doing, Ryan?
Hey, morning, Dale.
How are you? I'd rather interview you than Kane, but K-Man, but don't tell him, all right?
Yeah, I hope you got clean underpants on today. It's not looking good.
I tell you, you need him after yesterday. So
yeah, I think we might be in for more today, eh?
Yeah, I don't know. Like when we talked about the huge negative candle here yesterday in NASDAQ, people were placing its bets, and I thought there was a chance that 47.45 would hold in the S&Ps, but looks ugly. I think what you have to do now, if there is a sharp 1 to 3 day rally, is old supports, new resistance. If we had a rally here,
yeah,
and you're stuck in things, you lighten up on that. If you're a spec trader, you take a shot at the short side. Same in NASDAQ, maybe up around between 16,000, 16.2. This was where it really started accelerating under 150.
Yep, don't chase it. Don't chase it. Unless we get those lows breaking.
Yeah, I think we are going to, possibly even challenge these lows down here, and perhaps S&Ps are going to, challenge this 4,500 level. If it does it, it'll break an uptrend.
Yeah.
And what was interesting, gold and silver started selling off. Silver, I want to compliment my patient trading warrior brother, Stelios. Looks like we could get our levels here in the next several weeks. Good patience, buddy. They're doing it to gold. I don't know if he's here.
I'm here. I'm still here. I'm still patient.
Right,
he's always lurking.
And we did get a little bid in the dollar, but mainly against the Aussie. Perhaps we're going to still, take this out. That further risk off might be exactly the thing to, take the dollar back up for, a push up here. Really the dollar, it wasn't much of a bid, brought it back from 95.50 or so, but maybe we'll get this breakout to the upside and complete for a while. Anyway, it's not the kind of action you would normally get in the dollar. I mean,
no, FX has been pretty quiet. It's only really the Aussie that's moved.
That's right.
It's very weird move. I mean, it all kicked off with the Fed minutes last night, which to me was a bit strange because it's been ages since we've seen the market move on Fed minutes, and it's not as if the stuff that came out wasn't what we'd already heard at the meeting. So it was a very strange. It's almost like the market forgot that the Fed were tightening this year.
Well, they kind of they're hinting now that they're going to be pushing it forward. So the market's pricing 80% chance of a hike in March, which is it's aggressive, right?
Yeah, but that's what they were saying at the meeting.
No, they were saying that they're going to end the taper by March and then they're going to start hiking. So people were talking at least one meeting afterwards, but it's all being brought forward. Yeah, compressed.
Yeah.
So now they have a high hurdle to do, to do. So
it's going to be interesting. We'll see where the S&Ps are when they have to make that decision.
Yeah, but we've got new voters. So all those comments that were in the minutes yesterday, most of them are pretty redundant until we hear what the
good point.
Want to say.
Algos don't care about that.
You don't argue with the market. Market goes where it wants to go.
The interesting thing is that we have a market of two sides, let's say. So yields are rising, metals are dumping, Aussie, Kiwi are dumping, and stocks are doing nothing. So it's like something's got to give. Still, the equities are just okay. Yes, they sold off a little bit yesterday, but still, we're really
a little bit.
We're still close to all-time highs. Anyway you see it, it's just a blip. What we did yesterday. So equities are still not moving. And so what's it going to take? When do they actually start moving? Because when yields start rising properly, they're going to drop. Where's the Where's the pressure point? Where's the pain threshold? Where does that start?
The last few of grains that break the camel's back, the tipping point is what you're looking for. What's going to be the tipping point?
Yeah.
You have to respect how, crude during that whole sell-off yesterday barely turned lower. And, I like to look at, after we have days like that, what markets are really rebounding, and WTI was barely affected, and it's up pretty good today, up over 2.5%. It's pretty, you have to add, inherent strength in that for sure. Oh, and I wanted to show Blake's favorite that I started following. The US dollar.
Dogecoin? Oh no,
no,
is it?
Euromex. So you got a little pop, and they're trying to give it back today, but God, look where US dollar MEX held. So if it does continue and we go to 4,500, you could have a pretty good rally here. Get Blake's outlook on it, and he says this is the most dynamic pair for risk off Euromex, and it's trying to bottom. I don't know if it's bottomed, it's trying to bottom. Who else is around? Go ahead.
There's one thing that's sort of gathering. It's like a snowball, and it's gathering pace, rolling down the hill, and that's the fact that these supply chains might be easing. Something we spoke about last year, that we could have stagflation this year if economies falter, while we've got high inflation. But if those supply chains start easing, and we could get a bit of a snapback in activity, there's a big backlogs waiting to be filled. If that happens, you're going to see oil start to gain, because the cogs of production are going to start turning again, and people are going to start turning out their goods, filling backlogs, and we're going to get maybe a short, sharp, activity boost, and that's going to be good for GDP, and it's going to be another thing that potentially get the Fed hiking sooner. So, that's just gathering speed at the moment, and it's going to be good for your commodity currencies, going to be good for your commodities. Something just to watch if it carries on and if it grows.
So I have Bitcoin right on the neckline here. I think that whatever people thought Bitcoin would do during a pretty sharp market sell-off, maybe because it's become adopted and institutionalized, that it's more sensitive to what happens in legacy markets, because the new participants, the institutions, are heavily involved in legacy markets. So, it acted like risk off that's the way it looked to me yesterday, risk off in crypto.
It's a speculative asset, so it's going to move faster either way, up or down. I think Bitcoin, there's a 42K spike low from December, which is a big number, I think.
Yeah.
And after that, you're going to start getting close to Michael Saylor's average, which is now 31K, and that's a big whale there.
Yeah.
So
it measures 18.
Yeah.
This formation. So, but everyone's saying, probably going to be a failed head and shoulders formation, and it may not be. So, I think it's affected by risk off. So it's really just another asset.
Of course, high beta one as well.
Yeah. So what's our fearless leader thing coming in today? Blake, how are you?
Well, good morning, guys. How you doing? How's everybody doing?
Doing okay.
Good. I heard you talking about the dollar MEX and the Euro MEX, which, by the way, is definitely on my radar. I think there's a lot of, well, first and foremost, let's discuss, why stocks came off yesterday. And this is something that if you were on the daily roundup ahead of the FOMC meeting minutes, I said in the meeting minutes, or I said, hey, look, somebody asked me, are the meeting minutes going to matter? And I'm like, you know what? I was like, initially, I didn't think they were, but because we kind of know what the Fed's doing, but maybe that is the catalyst that gives us the, it's like, hey, this is real and it's happening. So, I was actually surprised at how big and how aggressive the move was. yesterday, but it was a big move. I mean, it was a big move, and the markets really took notice. And so I look at the S&P as this is more of a failed rally now. Here, let's go to like a chart that's like less drawn on right now.
That divergence was so glaring, Blake.
Yeah, but I know that divergence is great, but it always is, right?
Yeah, it's a million.
Yeah, I mean that. How many times has that been the case? I'll be a little bit more convinced when the market actually starts making lower lows, which obviously hasn't been the case, and we'd have to get all the way back down here to 45, 45, basically 4,500, in order for us to start making lower lows where people really get freaked out, But as of right now, I mean, that as far as I'm concerned, this is a failed breakout attempt above the highs, and we have to respect that. That means that any rally back is probably going to be scrutinized, and people are going to be looking for reasons to sell. I think there's some people that are going to be wrong-footed, but I've always believed that this year is going to be the year that we have a lot of great volatility. And the reason why we're going to have a lot of great volatility is because central banks are, raising rates. They're not just raising rates, they're tightening monetary policy. So I believe that's going to be like the biggest challenge moving into this next year, and it's going to create a lot of volatility for all of us as traders, and opportunities for us to make money in the markets, doing what we do. Now, how are we going to take advantage of that in currencies or any other way is, I think there's going to be a lot of different ways to express this, but you had mentioned the Euro Mexican peso earlier, Dale.
Yes.
Yeah. We held that lower trend line, and FYI, that 618 retracement of this entire move comes in just basically where we're at. So that low that was created right there. And am I long the Euro Mex right now? No, I'm not. I'm long the dollar Mex. And for those people that have been, in the ForexAnalytix chat rooms, that I've been long the dollar Mex, and I own it not too far from where we're at. I'm actually slightly underwater right now. But
are you a little disappointed that it didn't do better after I looked at those charts this morning on that kind of sell off?
No, not really. I mean, I know where the breakout point is. This is also coming out of a wedge. I know where the breakout point is, which is going to be around 2075. And I think the market needs convincing because, everybody
need another wave down in equities for it to kick in and break out.
Yeah, because everybody asks the same question. Wait a second, is this for real?
Yeah, I know.
Is this move for real? Should I believe this?
Probably why it is. Yeah.
Right. I mean, how many people have been caught on the short side of risk over the course of the last 13 years?
Yeah.
Right. Not just.
Don't remind me.
Yeah. I mean, that's all of us, right? We how many of us have been, sitting there going, oh, this is it. This is the time. This is when the market collapses here. This is it. And then, next thing you and by the way,
happens without you.
I'm not in the camp of the market collapsing. I'm in the camp of the market correcting. I think that any major move, any major
10%,
move that
Blake, about normal 10% correction.
No, I think it'll be bigger than that.
Okay.
I think it's going to be actually much bigger than that. But I also, okay, I don't do this rant often. And if you guys are longtime listeners of what of whether it's when I was over at, Ally Financial and MB Trading, you guys know I used to do, they would pay me to do hours of webinars every day, so for our clients, I would do like 3.5 hours. And so what would happen a lot of these times, Dale, what do you say for 3.5 hours on days?
You got me, man.
You do a lot of ranting, and I would rant about like certain subject matters, and like Takis, he's in our chat room. He's been in our chat room for a long time. He's like, Blake, that's where I get the most out of your talks are these rants that you do, and so the daily roundup has turned kind of into ranting session for me. And I don't rant about like, oh my God, that was the worst movie I've ever seen. I'm ranting about, different market, situations or whatever we're dealing with. And, the other day I was talking about, equities and where they're at. And, I believe this is a really big bullish breakout. And at first, when I look at the long-term, market structure, and this is the S&P longer term, right? I look at that and I always try to, go, well, what is it that really was, pushing us to new all-time highs here? And it was, I was like, usually it's it's some sort of advancement in technology that really, breaks out a market longer term. And, when you go back into the 80s, it was like, the oil markets and, just kind of like energy. And then, in the 2000s, it was, like you go back here, it was really this move that took us out of the bigger move here, right here, right? That move when we broke out was really the internet bubble, right? Yeah. Or the internet, the adoption of the internet.
.com.
Yeah, .com, and that really is, this, I guess, if you want to just, kind of look at, that's .com technology. And then, we consolidated for quite some time. And I was like, hey, why are we breaking out here? What is this breakout? What's causing this breakout? I'm like, it's not Tesla. It's not, well, we got electric cars. And so that's it. I actually think electric cars is, I mean, they may I don't know if coal is cleaner energy than, fossil fuels or crude oil. But anyway, I was really unconvinced about that. But then this breakout, obviously it's over this last year. I think it had more to do with this creation of cryptocurrency.
Oh, okay.
Yeah, it's a response to electronic payments really moving forward and digitizing assets, and does that mean that I really want to be a Bitcoin buyer right now? I know you were talking about Bitcoin and whatnot, and I actually think Bitcoin is going to move lower here near term, but I think that this move here is all monetary policy. But you can say, well, I'll just blame the Fed or all central banks on COVID or COVID response. Do whatever you want, but I think that this move right here is also a response to what we've seen in
COVID.
Well, post-COVID, it's a response to COVID, but it's also going to stick because I believe that there's the blockchain is probably going to change the face of our society one way or the other moving forward. So the reason why I say that is because when people ask me, are we going to have a really big correction or are we going to have a crash? I don't really think so. I would be more in the camp that we could get a 20-30% correction, maybe back down to 3,500 somewhere down here. And, we're going to get saved by every central bank out there, including the Fed, and it, right? So, that's coming. And so, let the market correct 20, 25, 30% and let every central bank freak out. And when they respond, you have to be there to buy or be, you have to step into the market at that point with the confidence knowing that central banks aren't going to let you down because they don't, right? So anyway, that's a little bit of a kind of what some of the things that I talk about during the daily roundup. We go into things like topics like that, but to be frank, when you ask me how far do I think the market's going to correct from current levels, I think we can get a correction. I think it's going to be a little bit bigger than, most people think, 10, 13%, 15%. No, I actually think that we're going to get bigger
30.
than that. Yeah. I mean, come on, this is a pretty big party with a lot of people. And it went pretty late at night and there was a lot of alcohol flowing. And it's got to come to an end at some point. There's going to be some stragglers around, but people are going to be hungover for a while. So I think
people were buying FANG as a flight to safety, Blake. I heard that a few weeks ago. People were buying FANG stocks as a flight to safety, that they'd be okay in a slower growth economy. They'd be, they were where you really didn't have to worry. And there's the ones that got creamed. So
yeah, well, I think that the NASDAQ stocks, if you saw, the tweet that I if you guys are following ForexAnalytix on Twitter now, you probably know that, hey, as yields go higher, NASDAQ's going to be punished the most. And I think that, if this market is going down on a yield move, which, you look at Stelios, you've had this conversation, with us for a long time, and you've been worried about yields moving higher. Well, look, if this is a correction caused by yields, which look at the 10-year here, we will probably see the NASDAQ underperform other markets. So, if the S&P drops 20%, NASDAQ will probably drop 25% or maybe
looks
even more.
Looks like Head and Shoulders.
Weren't you saying that before? Was that you that was saying that about yields? I don't know. All I know is that I think we're heading down towards this
1.618.
Yeah, right here.
That's,
at least
that's the
near term.
big pivot, I think.
Yeah, and you look at it. Just keep in mind that blue line here. That's the blue line here, but you can see the magenta one. This is all a really big support zone for the 10-year. So yeah, I mean, I'm not really 100% convinced that the yields are going back above 2%. I know a lot of forecasters are saying that we're going above 2% this year. Yeah, maybe, but I think this is going to be the test is going to be what's coming up. So
you saw no safe havens worked yesterday. Nowhere to hide.
What? Not even Kathy Wood's ARC. Do you see how that's broken?
Oh God,
that's just gone completely.
She sold Tesla. They average out on their losing trades.
Okay. Well, selling Tesla is not a bad thing, actually. If you've been long for a while, yeah.
Yeah.
But yeah, that's broken and it's down in pre-market. It just doesn't look good.
No,
tech stocks in general.
It does not look good. But hey, I'll tell you what. If you guys haven't learned, you're going to learn. Don't chase the market lower. If you're bearish, sell rallies, I think right now is where the market's going to pivot around this, these levels here. And if we're going to pivot on to the short side, we're going to do it here. And if not, because you can see the market is, again, this is here, I'm giving you guys a little bit more than I should be, because this is like a lot of the stuff that we segregate for our clients, the ForexAnalytix, subscribers during the morning edge. But you can see this little inverted head and shoulder pattern. I'm going to be a seller of the S&P up here at 4750. I'm just telling you right now. But I don't know if I'm assuming right now I'm not the only one thinking this. I'm not the only one thinking, hey, that was the previous high breakdown point. I want to sell any rally up to here. How many people are thinking what I'm thinking? I'm assuming everybody. So when everybody's thinking what I'm thinking right here, that means that we might just end up failing here. And then we just get some sort of, consolidation, which ends up being, more of a pennant, and it says, yeah, F you, Blake, and everybody else trying to wait for the market to go down or going to go down without you. So you have to be prepared for that situation as well. I don't think that, just because I'm patiently waiting for a move to 47.50. I'm going to get it. I'm going to try to, but I'm not opposed to the idea of thinking that it could morph into something else today.
You got to look to sell the break then.
You got to.
If we continue to hold sort of 47.15, that's your place to go short really tightly. If you get back above 20, you're wrong.
Right.
And then you resell the break of the low down to that 46.80.
You're right. These are the types of things that, guys, we talk a lot about during our webinars and the chat rooms. So if you guys aren't involved in a good, community, a good trading community, make sure you take advantage of our $1 trial, because we are going to be offering our special over the weekend. And when we do that, we remove the trial. So you might as well try it right now. This way you can get in for $1 for 10 days. And then when the pricing changes, you get in at the discounted pricing, which is, the best bet for you. So, and you can see, this is our community, guys. This is what our community looks like. This is, I got up around here, and it's been kind of a slow morning. You can see good morning. That's when, I posted first, and then, that's all the chatting that's been happening. And plus, and not to mention all the side chats and discussions that are, that happen too, which they're threads, those threads branch off. So this is like one of the most active communities in the markets. Make sure you're involved. All right. So really quick, I know I talked a lot about, the markets and kind of how I feel here. Anything you guys want to add before Dale has his interview? Because we've got, obviously, and by the way, you guys keep an eye for ISM today. The services data is going to be pretty important as we head into NFP tomorrow. Any thoughts or opinions? Stelius, I heard you, Ryan.
Just want to add to what you were saying. It's an important point you make about chasing the market lower. And that's a good thing about being in a community like ours. You've got the wise heads to stop you doing things like that. How many people have seen the S&P dump off and think, it's going to go down further, I'm just going to sell it. And we're going to sell it right in the middle at 47.05, bang in the middle of the intraday ranges. And you're going to be potentially staring at, the deer staring into the headlights, not knowing what to do. If it goes back up, you're stuck. If it doesn't go down, you're stuck. And being in a community like ours, you get the wise heads like yourself and Stelios, K-Man, and all the other, great guys in there to say, just hang on, don't chase this market. Pick your levels. If it's not going to go higher, we're going to sell it if it goes lower, and use the levels to lean against and don't get caught out.
Yeah, it's so important. It really is. I mean, and I miss trades, you miss trades, we all do. But the worst ones are the fear of missing out trades that people, that's where people get, like you said, that's where they get in trouble.
That's where they do most of their money. Yeah.
Yeah. And I had a question from here. I'll just, give you, we had this conversation here this morning. So I'll just share this with you. Nuno wrote in, he goes, hey, I'm new here. What's your opinion about the S&P? Is this again a bearish move that turns out to be a false meltdown like in the past? Good morning, Nuno. And then we I have my opinions. Amanda has her opinions. And then, we threw out charts, so you can see, so there's a lot of interaction in our chat rooms, talking about these specific subjects. So you're not by yourself and you're not alone, because that's the worst thing you can do is find yourself alone. So especially when you're trying to trade. Stelios, what's happening? Any opinions here?
Good question.
You always got an opinion. Throw it out there, man.
About what?
I don't know.
I'm not, as I said before, I'm not convinced yet about this. People are saying, yes, market's turning yesterday. Yes, yields are going higher. I'm not convinced yet. I need to see yields possibly go through 2%. And then I think that we're going to have a proper move. But like you said, I don't think we're going to see a move like, 2008 or anything like that. I think if we do get 20, 25%, that's going to be definitely bought aggressively by everybody. So I'm still waiting for a trigger, but I don't see it yet. Yes, we're going to have a day or two where NASDAQ goes down 2%, but I don't think that's like yesterday, but I don't think that's going to tell us necessarily that the tide has turned. Not yet. Anyway.
Yeah. And again, I'm going to just backtrack a little bit and then just some really quick thoughts. I know Dale has his interview right now. Is your person here? Okay.
Yes,
so let me just wrap it up with this. Do you guys have any other opinions about, when I talk about, these big cycles in the market and you see these big moves and you go, wow, this move, in, the 2000s and, moving forward, that was really, it's all about advancements in society. If you think about, just go back 100 years, every time you get moved to another shelf higher in the markets, it's because of an advancement. And, right now, I think this was pushed a little aggressively due to all the central banks and COVID. And because that was a black swan event, even though it only lasted, less than a month, it still provoked such a big response from central banks globally that, and then, on top of that, you throw on a technology that people are now starting to become aware of. That could possibly change the landscape of how we do day-to-day business. When's the last time you guys carried cash? It's been a long time for me, years. So as we, evolve as a society, I'm not in the camp that, the S&P is going to completely collapse and we're going to lose 80% of our value here. I think that any correction, especially a big one, 20, 30%, maybe a little further, maybe a little less, is going to be supported. And, we're going to consolidate till we figure out what that next technology is when we go to target. Mars, right?
Yeah, 3,300.
Yeah. So, oops, I didn't mean to do that. That was a slip of the mouse there. But anyway, yeah, guys, if you have any last minute things that you want to say about that.
Nope.
Blood in the streets.
All right. Everybody wants blood in the streets, right? All right. But we'll see. I mean, look, I'm not opposed to selling. I'm not opposed to shorting the market. That is for sure. So, hey guys, thanks for being around with us and the ForexAnalytix team every day. Tomorrow's going to be a big day for non-farm payroll. So make sure you're here. We will be covering it live. Dale, I'm going to pass it over to you and you have a great interview with your guest.
Don't forget the competition.
Oh yeah. Enter the contest.
That's right. Right here. Let me pull this up really quick. I'm so sorry, Dale, and
That's okay.
Guest.
Thomas is patient.
Okay. Yes, oh, thank you, sir. Appreciate it. Just really quick. This is Ryan. Obviously, you can see if you're following the ForexAnalytix community, you can get the. Remember, we have. Whoops, that's not here. But he's running the. Say it, Ryan. Please.
NFP contest.
Sorry. Yeah, it's still early in the morning here. Yeah, the NFP contest. And how many months are we giving away this time?
Oh, loads. it's 2 months for the first winner, whoever comes the closest, and then 1 month free sub for the next 2 winners.
Okay. Wow. So that's 4 months. Okay.
It's like the Irish sweepstakes.
We're gonna pull that right out of my pay or somebody's pay. All right. So anyway, just letting you guys know that those are some free months that we are giving away. It is an NFP competition. Make sure you're following ForexAnalytix and Ryan, and make sure it's free to enter. Just guess. I'll respond. You have to respond to the tweet. Right. You can't just start random because we have to find the tweet. We have to find your number. So you have to respond to the tweet that the ForexAnalytix team does. Ryan
NFP,
will get that tweet
no
out shortly.
Freaking problem. NFP, no freaking problem. Anyway, thank you. Thank you,
all right,
team.
Guys. Sorry. So Dale, it's all yours. Thanks everyone for your support.
All right, buddy. Thank you, team. Thomas, this is your environment, man. It's custom made for you, buddy. Welcome back.
Thank you. Yeah. So it seems, we continue. I missed the kind of, I've been here in order for maybe 7 minutes. But yeah, it seems to be.
Do you have anything to share before we start?
Yeah,
talking?
I could show you summary of the daily shot about the Fed minutes. It's interesting, actually. So this is just something they give you to. Can you see this?
Yes, got it.
So yeah, this daily shot and excellent. I recommend everyone to subscribe to this. Is good stuff. But there's about did you talk about the Fed minutes? Anything?
Yes.
Yeah.
Yes,
okay. Okay. So now you know what's in here. So basically, that they are really now considering to not just taper, but the quantitative tightening is there. So and this is something like we and I have been warning for a while. So you know that I said that they would start it in September. Well, they didn't. They started in just a month later. But the fact is that there's someone that writes just in Twitter 2 hours ago that they have really not noticed any tapering if you look at the Fed balance sheet. And I hadn't had the time to check it today, but it doesn't really seem that they have done the tapering a lot.
You mean it's all jawboning and they're not lessening their buying?
Yeah, but they are truly worried. You see it in the minutes, but they are also I think mortally afraid of starting the tapering and the quantitative tightening. So, but if you look at the bond yields, they are buying it for sure.
Yeah, they remember bond vigilantes from the 80s and 70s.
Yeah.
They're old men now, but they're still vigilantes.
Yeah, they are still there.
Yeah.
And if these trends continue, it's not going to be a long time before the U.S. economy is seriously in trouble and the financial market's true. And this is interesting. The probability of 4 Fed rate hikes in 2020, it has increased massively. I've been saying that the Fed will raise rates 6 times this year.
Oh my God, 6!
Yeah.
Do you remember us saying, Thomas? You and I, we go back a little while, but wasn't it 2 hikes and a stumble? Isn't that what it used to be?
Yeah, that's what it used to be.
Okay, so God, I can imagine you're not going to be stumbling with 4 or 6. You're going to be on the floor. Yeah,
you're going to fall massively. And what is interesting here?
So why are they doing this now?
Inflation.
Why now?
It's so widespread. They really cannot. It's like I talked with one farmer in Finland 2 days ago, and he had ordered the fertilizers.
China's not sending it.
Yeah, and they have cost 135% more than a year ago. 35% more.
Yeah.
And this is spreading all over. It's I heard it in the US too. So if you just consider that the fertilizers are, and they come to the prices with a lag. So let's say that we have, I think by the end of the year, by summer, we have massive increases in the price of food. They will guarantee that the inflation will keep going. And that's just few
because higher rates do not affect agricultural commodities.
No,
I mean, just because it can affect stocks, maybe economically sensitive commodities.
Yeah.
I want to ask you, what's your take? The unusual thing that stands out to me today is when we were getting risk off yesterday, buddy, crude barely budged, and it finally, closed a shade lower. And here we are today, up to almost $2. So it had no effect where black gold acted good, yellow gold giving it up. What's your comment on crude? Do you think that it could have something to do with Putin? And
it's a geopolitical issue here.
Okay,
in Europe, definitely. So I don't know, and I don't know what the Arab states are playing. But did you know that it was just before Christmas the Putin closed the natural gas pipelines that come through Ukraine, closed them for a while. So it's a geopolitical game here, and
it's got a lot of leverage.
Leverage, sure. And the price of crude can go anywhere. It depends what kind of moves they they make in Ukraine, for example.
So we've moved from we're so used to having oversupplies of cheap goods for generations now, at least a generation. That's what made Walmart and Costco, to a new paradigm of the just-in-time inventory to now out-of-time inventory. I don't. Do you think that's going to change?
Yeah, it is. It's definitely going to
I mean, we're not going to go back to 2019 in an adversarial relationship with China. We can't, can we?
No, you cannot. No. It doesn't happen. So I think we have a massive change coming with the, all the global supply chains. They need to come back. The in-time stuff needs to be more like, you have warehouses and you build more of your stuff by yourself, and that's the where we're heading. That's the where we're heading.
So what do you do? I mean, there really was nowhere to hide except cash, and I guess it depends on what fiat you prefer. But yesterday, bonds are leading this and rates are leading this, but gold tried to hold. But it's giving it up today. You still think you just have to keep accumulating precious metals here?
Yeah. Precious metals, and then one thing is that if you're thinking, if you want to hold European assets or cash, you really need to start to consider in what country you hold them. Like, let's say the Europe, if the ECB will be forced to raise rates at some point, and at that point, it's highly likely that Eurozone unravels. So in that case, all your assets will be priced based on the country where they are. So if you have cash in German banks, it will be, German euros after that and stuff like that. So you have to be careful where you hold your assets in Europe, at least in short term.
Where are you holding yours?
Finland, basically.
Okay.
Now,
is it because you live there, or because
just because
structure?
I live here. That's the only reason.
If you had your druthers, where would you go? Switzerland?
Switzerland and US, Texas.
Okay, Texas. So is Texas going to secede? That's an interesting answer.
No, I think what I'm hearing and what I'm seeing from here is that I think the Texas they may even leave at the worst case.
Yeah.
But in any case, it's the powerhouse of the US now.
That's really interesting. Shifting from the coast, and Elon Musk, do you think it has a lot to do with what Elon, also their tax policy of zero state tax, energy centric? Is that what makes it a powerhouse?
Yeah, powerhouse. And the fact that they don't really, they really try to, I think they try to uphold the American dream. In any case, and defend they are pushing back against the White House and the really strange policies they are not driving. It's a divisive policy. Like everybody claimed during President Trump's era that he is trying to divide the US, but that was nothing compared to this.
Yeah.
So I think you have to.
We normally don't talk politics, but the divide is as big as the Grand Canyon.
It is.
I mean, one statistic, and it's not political, that I saw is that the past 4 or 5 presidential elections, they poll the losing parties' voters about whether or not they thought there was a problem with the election. And you could have said that with Gore Bush, right? I mean, that was a Chad, right? Yeah. And most of that, the numbers came in at about 10-11% throughout all of those elections. And now it's at 60, which is, a huge differential by the magnitude's unbelievable. So
it is.
So and Bitcoin's not a hedge against risk, is it?
This is the one thing that everybody's been thinking about. Well, many consider that Bitcoin is the one asset. It's the new gold. But if you look at this, it's not. So it's a speculative asset, and I think this shows it rather nicely. What's happening?
Maybe we need. Maybe this is by design. for us to go cashless to blockchain for all currency interaction. You think that's a possibility? I mean, what's the end game here, Thomas?
I think the end game is we go back to cash for a while, or even precious metals.
You think that's what the governments are going to do, or going to want to do?
No, the governments are trying to do the other way around. They are trying to bring the central bank digital currencies.
Okay. So how are citizens of each country going to fight that? By having a black market and everything?
They're going to fight it through the privately issued cryptocurrencies naturally. So you have these bitcoins, and they are kind of a remedy against the power grab of the central banks and the global elite, if you may.
Are you buying any of those?
No, not at the moment, no, because we consider they will crash when the crash. All the cryptos will crash when the crash comes. So we are not buying any of those.
Do you think it's begun, or this will just be a normal 10%? Or even a 30% correction, but then the market recovers as the Fed reverses course?
Well,
do you think the Fed will really be?
You really think the Fed will revert course after the market crashes? But I don't think they have options, because the inflation is so widespread now. So this is like different as
but
before.
They can't cure the supply problems with higher rates.
No. But in the 1970s, you had the similar problem, the oil shock. But the thing is, when it transfers to wages, as it now is happening, then it becomes kind of a demand side issue, and they fought it by raising rates back at the time.
Right, I remember. Boy, everyone's wearing win buttons. Whip inflation now. And it took it took 20% rates back then.
Yeah, too. We have I start a new share. This actually, we don't usually do politics either, but we have this special report on the Great Reset and what it would mean. We just needed to take a stand, an analytical stand of what it would mean if the Great Reset is a term pushed or the agenda pushed through by the World Economic Forum, and it's really strange. But here is there is a lot of stuff here.
So you have a special report that you put out. When was this?
This came out on the 29th. So just 2 days ago, actually, a week ago.
Okay. All right. Interesting.
And we kind of mapped out where we are heading now. What is the route we are on? Then we had we explained what the Great Reset actually is, and there are like three main components. First one is the government should steer the market towards fairer outcomes using taxation, regulatory, and fiscal policies and stuff. Then there's the ensure that investments advance shared goals. And then there's to harness the innovation of the so-called fourth industrial revolution to address health and social challenges. These are really nice goals, but everyone understands that if you do analysis on this, government steering, well, that's not good. That's never led to anything good. Government should ensure that investments share some shared goals. That's like in the Soviet Union, it doesn't work. And it's really, when you do the analysis on the Great Reset, it starts to look really bad for the world. So there's all this kind of government control push upon us, and that's worrying.
Yeah, it is.
But there is the thing that we have three scenarios here, where the great economic takeover, global authoritarianism, and those. But what I would like to talk was this. Inflation and the Fed funds rate, and the 1970s shock, the oil shock, and how the Fed funds reacted. You can see it on the red line here.
Yeah.
So as the inflation started to rise, so did the Fed funds rate, and then they had to rise it really high. And the thing is that if you consider now that the wages, like the quits in the US, are really high, now. So people are quitting, I think, mostly because they know that they will find a better job with better salary. So the kind of workers have the negotiation power back.
Yes, they have.
I think, yeah. And this is what happened. Like in 1973, the wages were not rising really fast. It was about 6% annually, but 6 months later, it was close to 10%. So it takes a long time before wages react to the supply side shock. But when the wage start to go, then they just, they keep on rising, and they keep on feeding to inflation. And then if you have any other shocks, like in the late 1970s, you had the Iranian Revolution, and then you had the war between Iran and Iraq, and it put a new shock to the wages, and then the inflation really took off. And just think now, if we have another shock, something like for example, from the prices of food, something like that, to the increase in prices of fertilizer, whatever.
Food security.
Yeah. And now the Fed, the Fed funds rate is at zero or 0.25, whatever. But and they are so far behind the curve. So they really have to, because the inflation is stopping at some point, because it's the mandate of the Fed to keep the unemployment and unemployment, and also the prices. They have just these two, and if they let inflation run amok like it's almost is now, then there's going to be political repercussions, and people will get angry on the inflation from the inflation.
Yeah, I believe that's already
what
happening.
They have, yeah, definitely. So they have to be very vigilant and raise the rates really fast. And the rising of the rates, it's difficult. But I would like to just remind you what happened with the. Let me see. I have it somewhere there. Okay, so what happened with the quantitative tightening, which means the runoff of the balance sheet of the Fed. So we have the Dow Jones index. Since the President Trump got elected, this was one of our blogs, and you notice that at the early 2018 they started to accelerate the balance sheet runoff. I think it was about 50 billion a month or something like that. Yeah, and then the market crashed in early February. They didn't really raise, and then the global quantitative tightening started. So the global balance sheet of the central bank started to shrink, and then we had this massive sell-off starting in October and in December, and that was when the Fed pivoted. Yeah, as we all know.
That's when Kramer was saying they don't get it.
Yeah, and everybody was blaming the Fed. But the inflation was really low then. Yeah. Now it's it could be early, before summer, we could have even the official figures could be in 2 digits. So can the Fed really make a pivot then? I'm rather skeptical. And this is the real risk, that they cannot turn back. When they start to raise rates and quantitative tightening, they cannot stop it. And that's the risk. And then we have a outright collapse of the financial markets and the economy. So they have they might face an impossible dilemma during the first half of this year.
Yeah, everything's compressed into this time frame. Yeah, that's been happening for the last 10, 13 years.
Yeah, and then one small thing, is how the quantitative easing, quantitative tightening works, because the quantitative easing is basically the Fed using the reserves to buy stuff, the treasuries basically, and this works as long as you are buying from banks. But if you are buying from hedge funds, you have to pay them. You cannot use reserves, and then you have to create deposits to pay to buy the treasuries, and you can see a massive increase in cash in commercial banks because of this. And this feeds into the stock market and all that. And then when you have quantitative tightening, the amount of cash drops really heavily. So this is how it works. But we think this is the main mechanism through which the quantitative easing and quantitative tightening affect the financial markets, because it's a central bank credit. And if you take that away, start to diminish it, you will have serious problems.
Tightening credit conditions. Do you keep your cash in a bank in Finland? Are you worried about the banking system?
Yeah, we are. We have done an analysis on the Finnish banks, and the fact is that in any banking crisis in the world since, well, at least during the past 100 years, every country has kept one big bank standing, because you need to do that. Yeah. So in a banking crisis, you need to kind of make an analysis in any country you are, which bank will be kept open in any circumstances. And we have our money there, and then there's actually a friend of mine. They are buying, not building a bank that will operate based on gold. So it's called Voima Gold Bank, and they have a vault here in not actually just a few blocks from where I live. And they are creating a gold-backed banking system, or banking branches, and we have also accounts there. So that's basically our preparation. But the thing is that look for the bank that will be kept standing no matter what. That's the safest bet now. But there also, the other thing is that after the 2008 crisis, they put in place regulations and laws that allows the banks to use the deposits to capitalize themselves.
You mean the deposits?
Yeah, deposits. Yeah.
Oh, so you're talking bail-ins?
Yeah, bail-ins. Yeah, and they did it in Cyprus already.
Right. And
that's a big risk. So we have what comes to where you hold your assets, you have massive risk. You have to consider, the situation in the financial markets, in the banks, and also if you have assets in Eurozone, you need to think what happens if the Eurozone unravels. So if you hold Italian assets, they can become half in value when the Eurozone unravels. So this is I think we are entering a time of unprecedented economic turmoil. It's few months away probably before it really starts. But this can be something we have never seen before. And that's something everybody needs to be prepared for.
Thank you, Thomas. Happy New Year.
Thanks. You too.
Anyway, I'm going to have a disclaimer at the bottom of the interview. And it's going to be, stay away from razor blades. Put them away before you listen to this. Right? Yeah. Anyway, you never know if you have faith till you need it. So we'll see, and appreciate your looks as always. And when we have you back, and if we're still broadcasting,
we have to broadcast.
Yeah. So all I can say is thank you, buddy.
Yeah,
I mean, you don't pull punches. You say what you think. You've been warning about this for a year, and I'm sure you've been taking heat, and I bet you hope you're wrong. And but you gotta say what you think.
Yep.
And we appreciate that, and that you came here to share your views with us today. Appreciate it.
Thanks, and talk to you again.
Yeah, we will.
Yep.
We'll keep the narrative going. And so that's a wrap, everyone. You could follow Thomas at MT Melanin on Twitter. And how do we get your report?
You can order it online from our store, which you can find at gnseconomics.com.
Okay. All right. Is that a link on your Twitter handle?
Yeah, there's a link there.
Okay. All right. Thank you very much, buddy. Be safe, be healthy, and hopefully we'll talk again.
Yeah, we'll do.
All right, buddy. All right,
Bye-bye.
that's a wrap. I'm glad you guys enjoyed it, and good luck today. And you could join the team on the Morning Edge if you haven't tried the trial. I mean, what a great environment. I did see Amanda cash in on that washout in S&Ps yesterday. It's empty. Let me look. You'll see it when we post it, but I believe it's at MT Mal Linen. Pretty sure that's it. Oh, that was you.
Yeah, that's it. Yeah.
Okay. All right. See what a memory I have for an old man. All right. Take it easy, my trading warrior brother. And guys, we'll see you tomorrow. Big day with the NFP, bigger than usual with what's happening in the markets. And, you know, you need to collaborate with the community during a time like this and not just have your own point of view, but have a view of other point of views. So I'll talk to you guys tomorrow. Remember, don't just count your pips, count your blessings. Adios.